Hi, I'm Patrick Tuttle, the real estate guy with Legacy Real Estate Services with FAQ Friday for today. It is Friday, May 1st, 2020, and today's question is really not so much of a question from a specific individual, but it actually may be from numerous people out there regarding mortgage forbearance under the CARES Act. And I'll be right back with some great information on the CARES Act and mortgage forbearance. Alright, so I'm back, and there's been a lot of talk lately about the CARES Act and mortgage forbearance. And the question is usually, number one, do I qualify for forbearance? And then number two, if I do qualify, should I do it? Now, the information I'm sharing with you today comes from a friend, Josh Brown, with Legacy Mutual Lending out of Austin. And Josh does a fantastic job on mortgages. His contact information is right below me. If you'd like to talk to him specifically about it, his number is there. You can give him a call. He'll give you more information. But that's my source for the information, because he's the expert in mortgages. I'm the expert in real estate. So we work hand in hand to help people. So the information I'm sharing with you today is from Josh. So first off, the question is, am I eligible for mortgage forbearance? And here's what it states. Number one, your loan is not eligible for forbearance until it is federally guaranteed. Okay, so if you've got private financing or you've got a loan that is not federally guaranteed, you are not eligible for mortgage forbearance. You'll have to work out something with your lender specifically. Continually, if it is federally guaranteed, after you make two payments to your final servicer. Okay, so who's your final servicer? Well, if you've recently purchased a home and your loan originator was one company, and then you got a notice in the mail or maybe a notice at closing that said, here's a company that's going to be where you make your payments to. That's what's known as a loan servicing company, and they collect on behalf of the actual lender. Okay? So if you got a notice, or if you've been paying to a different company over time, you may be federally guaranteed, but if it's a new loan, you've got to make two payments to that new servicer before it becomes federally guaranteed. And then continuing, call your servicer and request a forbearance prior to the guarantee will make your loan ineligible for federal backing. So that's a way that you can disqualify yourself if you've gotten a recent loan and then you haven't made any payments and then you call them. If you call them, it's going to make you ineligible. They're going to think you're just skipping out. Loans that are eligible for forbearance must be federally backed by either FHA, Fannie Mae, Freddie Mac, the Veterans Administration, or the United States Department of Agriculture. All of these loans are federally backed, and you may qualify if you have one of those and you've made two payments to your final servicer. That's the way this thing goes. Now there's some follow-up questions on here. So number one, what is forbearance? Well, forbearance is when your lender has agreed to let you delay payments. It's not a forgiveness, it's a delay. They're going to say, okay, you don't have to make the payment for this month and maybe next month. You may be eligible for an initial period up to 6 months, but it's not a forgiveness. The payments are going to get tacked on the end, and you're going to have to make those payments up at some point. Number two, what makes the loan federally guaranteed? We already talked about that. And then the third one is, if I go under forbearance, can I refinance or purchase a new home? Now, this comes actually from back in 2008, 9, and 10 when we had the mortgage meltdown crisis. That's where most of these rules come from, is they're just bringing them back out. Now, what we state here is, if I go under forbearance, can I refinance or purchase? If you are in forbearance and rates drop, you will miss out on the opportunity to refinance. Why? Because you've got to cure that delayed payment, that forbearance, before you can requalify. Now, if you're out of forbearance and have not settled, you will not be able to repurchase or refinance. What does that mean, settling? You've got to pay back the amount that's due. As long as that amount that is due is out there, you're not going to qualify to either refinance on a federally backed loan, or you can't get a new federally backed loan. So be careful with the forbearance. Question: is there any financial benefit to exercising forbearance? No, there are absolutely no financial benefits. You'll have to pay back all of it: the principal, the interest, the taxes, and the insurance. You got to pay it all back. Again, it's not a forgiveness. 3, how long does the forbearance last? The initial term is for up to 6 months, and then you can request an additional 6 months after the first 6 months, and then that will be determined if you qualify at that time. Another question: who should I contact if I need to request forbearance? That's going to go back to your loan servicer. Your 1-800 number, most likely. You got to call them, talk to their people over there. Just tell the receptionist, if you can get a human on the phone, say, hey, I'd like to talk to somebody about forbearance. They're going to transfer you. Be prepared to be on hold for quite a while, because a lot of people are applying for this forbearance, and it may be right for you, it may not be right for you. Question: how will the payments work? Well, that's what you're going to have to discuss with your mortgage servicer to determine whether you're going to pay those off a little bit at a time, or if you're going to pay them off at a lump sum at the end of the forbearance period, or do they get tacked on to the end of the mortgage at some point in the future when you have to pay off that mortgage. And then, last question: will forbearance affect my credit? And the answer here, this one is no, but. No, it won't affect your credit to accept a forbearance on your loan. However, if you already missed a payment prior to getting your forbearance workout, that will affect your credit, because anytime you miss a payment on your mortgage, the mortgage company has the right to say, hey, this person did not pay as agreed, and therefore they're going to be a higher risk. So the long and the short of this is, talk to your mortgage servicer to determine whether or not you are eligible, and then if you are eligible, is it the right thing for you to do? If you can make your payments, the best thing that you can do is continue to make your payments as you agreed, and that will guarantee, at least if you have a job and the ability to repay and the credit scores that are needed, then you'll be able to get another federally backed loan at some point in the future. And again, if you've got questions about this, pick up the phone and call me. 915-588-1850 is my cell number. I'd love to hear from you. If you want to talk to Josh, his contact information is below. He'd love to visit with you about it as well to see if there's anything that he can help. For now, this is FAQ Friday for today, May 1st, 2020. I thank you for watching. I pray that you have a great day. Stay safe out there. God bless you, and make it a great day. Bye-bye.